Yeah.
But we're going to go ahead and move on here, guys. We have one final article that we want to talk about, and it is this one. Bitcoin transactions stay low despite price rally. One of the things we have been doing a lot of lately is integrating on-chain metrics and fundamentals, because I know on-chain is something you guys are very interested in, and it gives us insights into the crypto markets that we might not otherwise have through the charts alone. Bitcoin on-chain activity dropped low after May 2020's crypto market crash and hasn't risen since above these levels since. This is the chart that we're looking at right here. Bitcoin, number of transactions, entity adjusted with a 14-day moving average. As you can see, whenever Bitcoin goes into a bear market, almost immediately, you see the transactions jump off a cliff. And quite frankly, the decreasing transactions that started here in January should have been a sign to us that something bad was happening and that the market was rounding. And by the way, back earlier on this year when the market was rounding out, I said, hey guys, we're losing momentum. Why? Because the bears are getting stronger. Why is that happening? We should be seeing acceleration, not deceleration. That's a bad thing. And we saw the correction, but nobody listened. I talked about how we were going to go below 42. Everybody said, no, 42 is the bottom. I said, no, it's going to go lower. Anyway, pat myself on the back a little too much there. I don't know. Either way, the point is the number of transactions on Bitcoin is very important. Why? Because Bitcoin is a transactional currency, and that is one of the components of a currency is to be able to be transacted. The number of people transacting Bitcoin indicates the number of people using Bitcoin in a short-term way. Obviously, this doesn't incorporate hodlers. The number of people hodling Bitcoin has exploded, and that's actually the takeaway I want to have here, because some people are looking at this chart right now and they're thinking this is a bad thing for Bitcoin. There's no transactions going on. Why is that not happening? I think it's actually a very good thing. Let me show you this historical analysis to prove that. Here in January of 2019, we started to see the transactions increase. Bitcoin was at $3,000. What are we seeing right now? Bitcoin is starting to see its transactions increase. It pulled back to $30,000. The transactions were low, but that was the beginning of the rally. It took time for everything to keep going. You don't step on the accelerator and then boom, 0.1 seconds later, 60 miles an hour. You accelerate. There's an acceleration curve. The same thing is happening right now on Bitcoin and cryptocurrencies. So what I want us to pay attention to is how is this on-chain metric of the number of transactions happening every single day affecting the Bitcoin price? And should we be excited about this, considering the fact that other charts will tell us that the number of people hodling Bitcoin is incredibly high right now? Tim, I want to hear your take on this. Should we be concerned that transactions are still relatively low compared to 6 months ago? Or should we be excited because it's an indication that people are hodling and not looking to sell?
Yeah, I don't know. I think we need to see that play out a little bit more. I do think there's a large amount of hodling. Also, it's not the most, like right now, Cardano is the most attractive project to get into. And then right before that, Ethereum was the most attractive project to get into. I think there's a lot of stuff going on in a waiting period while things sort out. But I think it's one indicator that is pointing bearish, but there's a lot of other indicators pointing bullish, and it's potentially what is stifling an even faster rise in Bitcoin. But we're still seeing bullish momentum on Bitcoin, even despite the fact that currently at this moment we're going through another small correction, which is, again, just part of what Bitcoin absolutely needs. In reality, though, I think before we lose our minds and freak out, let's see a couple other things happen. I'm not too worried at this point.
Yeah, absolutely, guys. I'm trying to find this, and I can't find it off the top of my head here. But I do know that I've seen charts recently, and we've talked about charts recently on the show, about how the number of people hodling Bitcoin has massively gone up. I think the important thing to note here is that some people are trying to call this news of the transactions being very low, or this on-chain metric of the transactions being very low, a bad thing. A lot of people are pointing at this and saying, oh, well, that happens during bear markets. But a lot of people are not pointing out this last 2 weeks of uptick. We've seen a massive uptick in not just the transactional count, but also, obviously, the price, the retail investor interest. We're also seeing a big uptick in the hash rate. The hash rate has rallied massively. In fact, I can show you that right now. Bitcoin hash rate. Go over to blockchain.com. Total hash rate per second has massively increased from its low of 85 million all the way to 123 million. So the hash rate is increasing. When we're talking about technical analysis, we have to make sure that we understand a concept called time frames. Time frames are the amount of time that we are talking about. It's possible to talk about a geographic location. I can talk about the United States of America, and everything I say only pertains to the US of A, right? Or I can talk about the European Union, and everything I say only pertains to the European Union. I can say the USA is a wealthy nation. I'm talking about the USA, and I'm not talking about Europe. I can say Europe is a very traditional region, and I'm talking only about Europe, not the USA. When it comes to time, people get very confused. Because if you talk about time frames, you're talking about just the same way you talk about a nation, which is this own little enclosed thing in a unit. We can talk about time frames like this. We can say that time frames are like a nation as far as it being its own unit. Let's talk about a day. Everything we're talking about is within this day. We're not talking about a week. The week averages out, and there's a lot more information there. We're talking about a day. Right now, we're talking about the next week being relatively uncertain for Bitcoin and Ethereum and highly dependent on a Cardano's rally. However, that's only that unit of time, that 7-day period of time. That is agnostic of the rest of the future of crypto. Talking about the next 6 months of crypto, though, looking at that unit of time, I'm gesticulating all over the place here. Talking about that unit of time, and no, that's not a curse word, look it up, it means hands movement. Looking at the next 6 months of time, the market is incredibly bullish based on these on-chain metrics. This is why all this on-chain stuff we talk about typically in long-term perspectives. Because generally speaking, on-chain metrics are not going to affect the price tomorrow. They're going to affect the average price over the next several months. So the short term for Bitcoin and Ethereum, and frankly Cardano, is probably somewhat bearish, depending on what Cardano does. The long term, as always, is incredibly bullish. And the reason I make that distinction, I use that analogy, is because I get people attacking me all the time saying, Jeb, you said it was bearish, and then you said it was bullish in the same video. Yes, it's bearish on the daily chart and bullish over the next 3 months. Those are not contradictory. Saying that's contradictory is like me saying, oh, well, America is a wealthy nation, and saying, yeah, well, what about Yemen? I'm not talking about Yemen. I'm talking about America. I get frustrated with that one because it's just simple. Anyway, I've made my point. Tim, do you have anything you want to say to people about the long-term outlook for Bitcoin? What are we looking at on Bitcoin? Do you think it's going to $100,000 this year?
Yeah, I mean, yes, I do. And I think these small corrections are completely part of the plan. Without them, we would not have the health that we actually need to... Because I'm not too worried about will we get to 100,000. I'm more concerned with will we stay at 100,000.
Yeah.
I would rather us get to 80 and stay at 80 than get to 100 and crash back down to 40.
I agree, totally
right?
agree.
So to get healthy and to get to where we want to be in a healthy manner, we need these mini bear movements as corrections along the bullish process. And that is just what any investor is looking at for the health of a project. The truth is, I think a lot of investors look at things like what Cardano just did and be like, okay, don't want to touch that one right now with a 10-foot pole.
Seriously.
But they're looking at what's happening in Bitcoin and Ethereum and saying, hey, this is calculable, whatever the pronunciation of that word is. This is slow. This makes sense. It's not in a position that it's overextended and overbought. I can make money here right now. But for Cardano, a lot of investors, especially if they've been in the game for a long time, are probably looking at Cardano currently and saying, it's just a little too high for my liking right now.
Yeah.
I don't think this is a time I want to get in.
That's what I'm saying when I look at it, yeah.
Yeah, I think this is... Yeah. It's bearish in terms of the chart, bullish in terms of the longevity of Bitcoin.
Yep. I think it's really important that we're able to put things in categories and say, hey, we're talking about this time or we're talking about that time. I think you guys get my point.